Back in the action once again. It's about that time of day again here, folks. It's Thursday afternoon. It's April the 11th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, remember, I help new traders find predictable, dependable, profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best opportunities we see setting up for tomorrow. That's Friday's trading session. And tonight, we're going to grab oil, S&P, Nasdaq, gold, and euro on the schedule for this evening's video. I'm going to jump into oil first because the Texas T, the black gold, is setting up with one of those classic combinations of two specific price structures. And we're going to try to use both of them to find some reliable entries and some profitable targets in tomorrow morning's session. Let's jump in here on crude oil and let's take a look at what's developing here right into the overnight session. You'll see here on oil, we get this big bear move down. And one very distinct aspect of this big move down is they didn't reach the measured move, right? 1, 2, they barely missed that measured move. That measured move looks like it's unfinished business. And of course, anytime I have a strong move in one direction, I'm expecting to see a pullback and a retest of that low. So bears definitely have control of this market right now, and I certainly want to participate and sell up at resistance. Now, to do that, let's find some good levels of resistance that we want to incorporate with some entry patterns. First, it's a trending day, which means I know I want to use a combination of channels to find major levels of resistance. So that channel, right, is a beautiful spot now for me to sell off of that high. At the same time, I know we have a double bottom down here at these lows. I can take that double bottom, connect to the high, create that range, copy and paste, and that's going to give me some key levels of resistance. So the bottom line is oil is bearish right now. Barely missed that measured move. I'm trying to find some levels of resistance that I can sell at. I've got key levels at 88, 95, 14, and of course this channel coming overhead. So my plan is to sell high and get it back down to that low. And really the only obstacle that I see in my way right now is this rising support. Now, anytime we see a rising support trend line, it tells me one specific pattern to look for, and I'm going to talk more about that pattern as we go into tonight's video because I want to be a seller up here, but I certainly don't want to sell into that trend line. So I'm going to break this down, and we'll talk about 3 different ways we can sell this market. I'll also break down what it looks like for reversal and how we can trade that reversal in tonight's newsletter. Over on the S&P here tonight, the S&P, boy oh boy, does not look very comfortable right now. We're back inside of that little tiny trading range from yesterday's session. We rejected off that big round number at 2,900 overhead and back down into that range. Now, this is pretty interesting right now because, of course, we had that big range. And we know that the amount of the move above that range is probably going to be a good target for us to go below the range. So I have a reason to believe here these sellers are going to try to pick some spots here to get back down to that 28.75 area. The bears took complete control with that big move down today. And so once we saw the bears take control, now we know as long as those sellers can avoid this rising support trend line, they can look for selling opportunities to make that move back lower. There's quite a few moving pieces on this chart right now. 1 is the range, right? 2, of course, are the trend lines. 3 is the momentum on the chart. And of course, 4th one is that pendulum swing. The bears have momentum. I don't want to sell into rising support. What's the best pattern to avoid selling into support? We'll talk about that tonight on our video newsletter. I'm looking to get short up here inside the battle zone because I think you're going to see a lot of sellers trying to pick some tops on this and try to leave that runner into the end of the week all the way back down to the opposite side of the range. I'm also going to talk about how we can buy on the flip side of this, right? So selling high and buying low, and we'll break that into more details here tonight on tonight's video. Over on the Nasdaq here tonight, the Nasdaq is in full bear mode right now. You'll notice we have 1, 2, and almost 3 legs down. Very interesting to see another market tonight that has barely missed its measured move. Now, this is not a very strong trend right now. You can tell the moving average isn't very sloped. You'll see a strong trend on the gold chart in just a moment. And of course, a weak trend always tells me to look for those nice big pops so I can sell into them. Now, much like on oil, we have a bear market. The weak trend on this tells me that I'm probably going to want to see it go up nice and high and pull back here right before I look for that sell coming back down. But with that big push higher here, I know that momentum has a chance to shift to the buy side. If the buyers can get a nice big run on this, I'm looking for 2 distinct patterns here to sell this market back down. And if the buyers, if they can hold on to it, well, now we get to worry about buying back into those highs, which means I've got one specific pattern, the same pattern I was talking about on the S&P, which we'll talk about to be a buyer going back to those highs. So Nasdaq has a bear market. It's a relatively lazy weak trend. Weak trends always tell me expect deep pullbacks. Those deep pullbacks now, right, tell me that momentum's going to be a problem. So how do I sell into that bullish momentum? I'll put together 2 patterns up here to be watching for here tomorrow. I'll also talk about what the buy side looks like, and of course, if we keep rolling lower. So make sure you stay tuned on that Nasdaq tonight. And then of course, over on the gold, we talked about a weak, lazy trend. Well, this is about the polar opposite of the Nasdaq's trend over on gold tonight, with a very strong bear market as we go lower. Strong move down. Anytime we see a strong move in one direction, we expect to see a second leg. They got the second leg, and of course, well below that big round number at 1,300. At this point on gold, I would assume there are really one of 4 different scenarios. One is we keep rolling lower down to the next measured move. 2 would be we go sideways here. 3 would be a shallow pullback to the top of the channel. And the 4th and final one, which is between you and me, what I think might be the case tomorrow, is a big pop right back up with a short covering rally, just basically to kind of slingshot back above that big round number. I would imagine we might be looking to settle into a range around this big round number. And if we do, I want to be ready to sell on that battle zone up overhead. So I've got 4 different scenarios I'm watching for here tomorrow. All of them really at this point are sells. I don't see really any open space for a buy right now, but I will be looking at some counter trend reversals if we can get this final measured move, because at that point now, be 1, 2, 3 legs down, and then we'll start looking at maybe being a buyer here on the way back up. So 4, maybe 5 different scenarios I'm going to be prepped for here tonight, and we'll dig into that yellow metal in a lot more detail here on the video tonight. And then of course, over on the euro, we'll wrap up tonight on that mighty euro. The euro is still range bound, still stuck right inside of that trading range. That pendulum swing from last night's newsletter, you can see stalled out here and never made that move back to the high. That resulted in a 1, 2, 3 reversal. Big deal on this, because now we know we have a range-bound market. Range-bound markets tell us to sell high and buy low. The problem is we have some bearish momentum on the chart right now. So if I'm going to be a buyer into a bearish momentum, there are 2 specific patterns I want to look for down here. And obviously, right, I'll be looking to sell up above those highs, trying to buy those lows, trying to sell those highs, and we'll break down the right patterns to use, making sure we go with the market's momentum in just a few moments here on the euro. So range-bound markets on the euro, trying to buy low, sell high tonight. Over on gold, 4 different scenarios on gold. Nasdaq has that lazy trend. S&P is just a mess right now. I've got a feeling we're going to be picking tops on the S&P tomorrow. And of course, with that oil, of course, where I look for that pullback up into that battle zone. Now, I'm going to break all of this down in much more detail in just a few moments, but I want to make sure first that you never miss another great newsletter. And to do that, all you got to do is join our mailing list. And it's easy. Just go to the blog here at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video if you're on the YouTube channel right now. And all I need is your name, your email address, and then hit that subscribe now button. And make sure, remember, when you subscribe to the list, right, when you join our mailing list, make sure you check your inbox because I'm going to send you a special welcome email with a bunch of goodies. So you want to make sure you get your hands on that welcome email to verify you got the email and take advantage of the welcome goodies, right? So make sure when you subscribe to our mailing list, make sure you check your inbox. That way I can send you some good stuff so we can get the most of our time together here today. And then don't forget, I always love your feedback. I always love to know what you love, what you hate, what you'd like to change. You know, what's your favorite market? What's your favorite setup that we teach here at School of Trade? How have you used this, right, to make an impact in your own trading career? I always love your feedback. And don't forget, you can always post questions down there in the comment section below. So if you have any questions, any comments, any concerns, any feedback, right? What's your favorite pattern? What's your favorite market? I always like to know what you guys are using out of this so I can do more of the good stuff. And of course, anything you want to see changed, now's your chance to voice your opinion. Drop me a comment right below the video tonight in the comment section below to give me your feedback. I always appreciate the feedback. And while you're down there, give me a thumbs up on the video tonight if you love the nightly newsletter and you find value here with me every evening on this video. And don't forget, last but not least, pick up the phone anytime you have any questions and call me in the office. I'll be here for the rest of the week here, ready to answer the call, answer all your questions, and at least give you the information you need to make an educated decision. Brokers, charts, data, markets, time frames, any questions you guys have, please feel free to pick up that phone and call me anytime here in the office. All right, let's jump right in. Finishing up the week tomorrow. Tomorrow is Friday morning. It's April the 12th, last day of a very, very busy week. Now, don't forget, right, on Wednesday we had Super Wednesday, right? Today, of course, we had Thirsty Thursday. Well, tomorrow, finally Friday. And, of course, we are now kind of hobbling our way, right, into the weekend. And I say that because all of this big news we saw earlier on in the week, we don't have any more of that concern tomorrow. Tomorrow's pretty much a wide open day tomorrow. And of course, with it being one of the first weekends of the spring season, I would assume you're probably going to have a relatively small window tomorrow, relatively light volume. And if markets like the S&P continue to be choppy and sloppy like we saw today, we may have more people tuning in to see if Tiger can hold his lead in the Masters, right, than if the markets are moving well tomorrow. So be aware of that, right? As we come out of Super Wednesday and kind of Reaction Thursday, with no major news on the schedule tomorrow, we may see a bit of a small window of opportunity. My definition of a small window is really between about 8 o'clock in the morning to 11 o'clock Eastern time. I trade every morning in our trade room with our clients here at School of Trade. We open up at 8 o'clock, and you really got to have a good reason tomorrow morning to be trading after 11 o'clock on a Friday, right? So Fridays are always early in, early out. You'll have a smaller window to make those, right, to make those trades tomorrow morning. So get there early with me tomorrow. We'll get out of there early, right? Enjoy our weekend, and we'll come back and do it again next week. But other than that, though, there's no major news on the schedule tomorrow. I, of course, will always keep my eyes and ears open for any unscheduled reports that come out. You know, of course, we've had a lot of back and forth with the U.S. and China, the ECB, and of course their negative interest rates right now. A lot of stuff going on, so we'll definitely be listening in tomorrow to see if we get more of that. But as of scheduled announcements tomorrow, there's nothing on the calendar, which leads me to assume that tomorrow may be an early in, early out scenario. So again, tomorrow morning, 8 o'clock Eastern time, we're going to do it all together with you guys tomorrow with all of our clients, right, bright and early in the trade room. Now, getting ready for tomorrow's trading session. Let's jump into oil. We got oil S&P, Nasdaq, gold, and euro on the video tonight. And of course, starting off with oil. Oil is clearly a bear market right now. Momentum is bearish. Anytime I see a bear market, I want to find levels of resistance. One easy way to find a level of resistance is to connect these lows, bring it up to this high, and that will usually give you, it's kind of like a hidden level of resistance, but I think you can easily see here, I don't think anybody is going to be surprised by that level of resistance. So I would imagine a lot of sellers have their eyes up on the top of that channel to sell back down again. I want to go up and sell off the top of that channel. At the same time, I also notice we have double bottoms on the move lower today. Anytime I see a double bottom on the chart, I always know to mark up the lows, mark up the high between the lows, and that creates a trading range. Now, as you probably have heard me say many times before on this newsletter, anytime I see a market in a range, I can use the size of that range to project higher and find key levels of resistance. So it's bearish. We want to be a seller at resistance. I can use not only the channel to find resistance, but I can also use the range to create those what we call range expansions or range deviations right up above us. So we know the market wants to pull back. We know we want to sell off that pullback. But you'll notice, though, there's one big elephant in the room right now, and that is this rising support trend line. This rising support trend line is a big deal. In fact, anytime I see a market that has 1, 2, 3, anytime 3 or more tests of a trend line, and you really have to take that trend line seriously. So how do we sell the high of this while we still have a trend line in our way? Great question. What I want to do is I want to get this market up towards the high of that channel. At the very least, I want to see it up around this 63.88 area because after all, that's the range expansion level. And what I'll do is I'll use that trend line and I'll look for what I call a two-legged pullback pattern. For example, we got one leg, two leg, I want to go up and over and use that trend line now on the opposite side. So instead of it being a support trend line, right, it becomes a resistance trend line. Now, I'm going to warn you about this. Sometimes these patterns can get a little bit sneaky here, right? We go down, sometimes they go down, they'll try to rope you in, and then they'll come back up. So really stay patient to try to sell as high as you can, right? Don't get sucked into trying to chase the market right as it goes lower. So I know I want to be a seller right now, and to do that, I want to sell off top of that channel, but I don't want to sell right without getting below that trend line and using it as resistance. Now, another scenario you might want to consider here is if we don't get that pullback, right? This does happen sometimes. Sometimes the market will give us a 1-2 try, go up, and then it will collapse back down. And what happens is you get so much bearishness down here that it really can't rebound and get up to that trend line again. So what's the next best option on that? If they fail, right? If they fail to get back to that trend line now look for, at the very least, a trap pattern. Right? Trap patterns are a very effective pattern to avoid selling into that low. Remember, I don't want to sell into that low right now. So a quick recap here, we got that trend line coming up. One pattern's going to be a two-legged pullback pattern, up and over and go, selling off the underbelly of that trend line. Or, right, the secondary pattern would be if we make a run lower and we don't get that pullback, if it doesn't get that full pullback, now don't chase after it. You don't want to chase after it because now you're selling low. Look for those traps to sell nice and high. That's going to be a nice, easy way for us to sell this market. Now, what if I'm wrong? What if it sinks right back down in? What if we sink back into this range here? If it gets stuck now inside this range again and we don't get that pullback, keep your eyes on that trend line still because that hasn't gone anywhere. And then most importantly, we look for a very specific pattern. Anytime a market's inside of a range, we look for the two-try rule. I wait for the market to go up, try once, pull back, try twice, I want to see those buyers try once to break out, let them try a second time to break out, and if they fail, nice strong signal candle, and we're selling back down to retest that low. So now we've talked about 3 different patterns now to the sell side. How would the market turn bullish? I mean, after all, there's a big trend line right there. Could this market turn bullish? What do we need for a bull market? Well, first of all, we're bearish. So for me to turn bullish, the buyers have to show me what I call a 1, 2, 3 reversal pattern. Here's how it works. 1, a strong move against the trend. 2, a pullback to the moving average. And 3 is a strong move off the moving average. Now you can see earlier on in today's session, boy, these buyers, they almost got that reversal earlier on. But you'll notice they couldn't keep that run going. That's your cue, right? If they fail like that, and dumps right back down in. So remember, it's not enough to just get a strong move. You have to hold that pullback and really jump off the moving average. Once you get that pullback to hold, then I don't want to chase after it. I want to mark up that high, find my new channel high, and then pay attention here, draw it off the lows to find that hidden channel, and that's the sweet spot. Right where that initial high and the low of that channel is, that's where the bread and butter setups are going to be as we go higher. And I'll tell you right now, if the buyers can take control of this market again, they have a lot of potential now to go all the way back up and retest those highs. So if the bulls do take control, this could be a very, very good session, right, for buying pullbacks as we go higher here. So now you've got 4 different scenarios here. We have a 2-legged pullback, we have a trap high, we have a 2 try, and we have the 1, 2, 3 reversal. Now guys, I have so much I want to share with you on this video newsletter, but I got to keep going here because I have a lot more to cover. We got the E-minis, the gold, and the Nasdaq and the euro to cover tonight. So here's what I'll do. To give you a deep dive into all my favorite patterns, I can't go into all of them right now, but I will give you access to a free, exclusive free trading course inside the members section of the website here at School of Trade. I'll put a big link in the upper right-hand corner, and I'll also put a big red button right below the video tonight on our blog. So pause the video if you want to, grab that link, register for your free trading class. That way you can learn all about the 3-step strategy, my 4 favorite entry patterns, and everything we use in our trade room. In the meantime, though, let's keep going because I want to make sure we're ready for the S&P. Out of all of these markets tonight, I think the S&P is the one that's probably going to be the most confusing for most people. The euro is also a little bit tricky as well, but we'll dive into that later on in the video. Most important thing right now is this market on the S&P right now, there are 2 very important factors. One is the range. This is the range from yesterday's session. You can easily see the price went up and now has collapsed back down into that trading range. Now, what do we do with the range? We buy low, we sell high, and we avoid the middle, especially this range. It's very narrow. It'll be very difficult to use effectively inside the range. So the bottom line is I want to go up and sell above. I want to go down and buy below. Now, the second, and I think the most important clue on this chart right now is right here, and that is this big collapse off the high. Now, what do we always say, right, when a market gives a strong move? A strong move almost always gives you a second leg. So that momentum turns bearish, which means I want to focus on selling right now instead of being a buyer. See, it's really easy right now to think that, well, the market is overall bullish, so I should try to be a buyer. And honestly, between you and me and the rest of YouTube, I hope a lot of people do see it that way. Because the reality is the market is not a bull market any longer. Once we see that strong move down, that much strength, way too bearish right now to call this a bull market. So now put those 2 pieces together. We have a range-bound market that tells me to sell high and buy low. Then we have a strong move down, giving those bears control, telling me now I want to sell. If I want to sell and I know I want to sell above those highs, I think based on the fact that a lot of people are probably going to see this being a bull long-term trend. A lot of buyers are likely going to get stuck trying to buy up here. Buying too high, right? Way too high up to be buying. There's very little space up here for buyers to make any profit. So because the bears have control and we're right above the top of this range now, I'm looking for a chance to sell this thing back down in. And then if we can get back down to the low, then we'll look to buy it going right back up into that trading range. So like I said, the two most important factors right now on this chart are going to be 1, the range, and 2, the momentum. Since I know where my target is to go up and back down, go down and back up. How do we trade this now? First of all, I know where those buyers are likely going to get in trouble. And again, I've got this trend line coming over here right now. That trend line is a big, big problem for who? For these sellers right now. They're going to have to get away from this area. So sellers are going to have to get up so they can just simply get away from that rising support. And then when they go higher like this, I'm expecting buyers are probably going to try to buy the pullback. And you guessed it, I'll be looking to sell right into their failure. This is one of those patterns where you're going to have to focus on selling as high as you can here, because you don't want to sell into that rising support trend line. So here's my plan. I know I want to be a seller. I just don't want to sell very low here. I want to get the market to go up. I want to see buyers try to buy the pullback. Again, I'm anticipating a lot of, I wouldn't say inexperienced buyers, but buyers who aren't quite paying attention and might be a little bit blinded by this long-term trend right now. Even though the long-term trend is bullish, short-term momentum is bearish, which means if those buyers fail, that's going to give us two easy setups. One is a failure pattern, and the second is a pullback pattern. So again, imagine now, right, the sellers don't want to sell into that rising support trend line. It's a big trend line too, right? Imagine now, right, those sellers, they don't want to sell into that rising support. So what happens? They allow the market now to go up. Buyers now confuse this as being a bull market, which is not. We don't have a 1, 2, 3 reversal. Buyers now try to buy it. They try once, they try twice. We call this a failure pattern, and we can sell right into the stop losses of those buyers. Once I sell into the stops, I don't want to chase after it going lower because, again, we have that trend line down here. So instead what I'll do is I'll grab that, bring it over, and we'll sell from there, right? We'll sell that pullback from there. So that is one scenario I'm watching here, right, for tomorrow. Now, what if I'm wrong? What if the market jumps, right, and turns bullish? Okay, what would that look like, by the way? It'd be a 1, 2, 3 reversal. Now, this is where things are going to get tricky up here because you got that big round number, right? So if we do get that 1, 2, 3 reversal, if we do get that jump higher and these buyers do take control, keep your eyes out for something similar to what we saw earlier this morning, a trading range. Keep your eyes open for a range. If we see a range, what's the best pattern for a range? A 1, a 2, a failure. So if I'm wrong about the sell going lower, if it just runs up, pulls back, and goes, keep your eyes out up here for a trading range. Wait for that chop and slop to go. 1 try, 2 try, right? And we'll buy that low, right? We'll buy that 1, that 2. We'll use that 2 try failure pattern now to buy below the low of that range and go back up to retest that high. Now, another potential pattern would be if we make a very strong run through that high. I don't expect this, but this is a possible scenario. If we do see a real strong run, right, real strong blast higher here, let's say something happens overnight between the U.S. and China's trade talks, and all of a sudden the market's on fire. What would be a good scenario to look for here? We call this the 2 try breakout pattern. Wait for that strong move up. Let the sellers try to sell once. Let them try to sell twice. Once we see that trap low, bingo. Now we can be the buyer on that trap low. Again, remember, this is going to require us to be nice and strong as we go. And then I got a 1, a 2 try for the sellers, right? Looking for a trap low, and we'll buy up from there. So again, I'm looking for that 1-2 failure into pullback back down. I'm looking for that 1-2 up into a range. I would assume that's the case tomorrow. 1-2 and buy. Or it's a strong move up with a 1, a 2, a trap, and a go. Now, what if I'm wrong about all of this, right? What if it sinks back down and gets stuck inside the range now, right? What if it sinks back into this range and gets stuck in the mud there? Then what do? Then we use the 2-try failure pattern, right? Straight 2-try failure. At that point, if we end up back inside this range now we simply wait for the 2-try rule, right? The 1, the 2, and the back down we go, right? Let the buyers try once, let the buyers try twice, and we'll sell back into their range. What if the market collapses, right? What if it collapses down here? For all I know, we've got the pendulum swing, right? Remember, I'm trying to get short. I'm trying to get short up here so I can hold that pendulum swing, right? But what if what if the market collapses down here? Then what do? Well, now we have a bear market, but now we're below the low of the range. I want to buy the low of that range, don't I? So how do you buy the low in a bear market? One very specific pattern. We call this a nested crown reversal. In other words, I want to see 1, I want to see 2, I want to buy up from there. Now pay attention to this one. If we see a strong move down, wait for the sellers to try to sell once, wait for them now to try twice, get that little trap low, bingo. That's the pattern I want to see because that momentum will be so strong going lower. I really want to make sure I get that trap, especially because that trend line's coming down, and anytime I have an overhead resistance level that may be in my way, I always like to use trap patterns. Wow. We have talked about a lot in this short time here, right? We talk about the 2-try failure up here, right? Up into a range, up into the 2-try pullback, right? Even down to that nested trap low to buy off that low. Don't forget, guys, I'm just glossing over all of this for tomorrow so you know what I'll be looking for tomorrow in our trade room. But remember, grab that free trading course in the upper right-hand corner. Grab that big red button on the blog tonight, right, and join that free course that we can learn all the deep dive, right, into this entire trading strategy. How about some Nasdaq right now? Nasdaq appears to be a bit of a walk in the park right now. It's a bear market, lower lows, lower highs. As I mentioned earlier, it's not a very impressive trend. It's a relatively weak, lazy trend, right? This market needs to get up off the couch every once in a while, right, and pick up its crap, right? It seems like a pretty lazy market right now. All kidding aside, right? All kidding aside, though, it's a bear market, not a very strong trend, right? Lots of overlap. And whenever I see overlap on the chart, I always know we're probably going to have to wait for a pretty big pullback to attract more sellers, right? Sellers are not going to be too eager to sell low because they know this market's not a really strong trend right now. It is bearish, but it's going to take a much higher price to entice these sellers back into the market, right? That's the way I see this when I see these overlapping candlesticks, right? And remember, a strong trend will not overlap, right? Strong trends won't overlap. There won't be any overlap on these pullbacks. A very weak trend, right? A weak trend will do nothing but overlap. Does that make sense, right? On a weak trend, it's a bigger pullback that you expect to get because, again, to attract sellers into that market, there's no fear of missing out, right? You really want to get that market to go higher here so you can sell it right back down in. Now, another component here, you'll notice we are 1, 2, and 3 legs down. We talked about this last night. Markets love to make 3-legged moves. And what usually happens? They usually stall out at those 3 legs. They oftentimes go sideways, and sometimes, like the Nasdaq, they do a full-blown reversal. So we know there is major support down here, and that will play into this if we do sink lower again. Then, of course, same problem on the Nasdaq that we talked about on oil. I got a rising support trend line, right? That rising support trend line sets up for that key 2-legged pullback pattern. Okay, so putting all the pieces together right now, I have a bear market. I want to sell at resistance. What's the best way to sell at resistance? Find a channel, mark up those lows, right? I get those lows to mark up. Once I have those lows, bring it up to that high. But honestly, this little high up here doesn't really get me too excited. What I really like is this high up here. I call these hidden channels. That's the one I really want to look for here, up around that 76.35 area. So I want to see the mark go up so I can sell it back down inside that battle zone. At the same time, though, I have to be careful about this trend line. As I mentioned earlier, I have 1, 2, and 3 tests of that trend line, so I have to take it seriously. So what's the best pattern now to allow me to sell high but not sell into that trend line? If you recall earlier, we want to use the two-legged pullback, right? Let them try once, let them try twice, then get up underneath the trend line and use it as a key level of resistance. Okay, these are easy patterns. Again, just be very careful. A lot of times what happens is they'll make that run lower. Don't chase after it as it goes lower. Wait for it, and then sell it when you get that pullback. And of course, sometimes we don't get that full pullback. Sometimes it'll go down, it'll go up, and then run. And in those situations, we're probably not going to get that full pullback now. We'll probably end up getting a trap here because remember, trap patterns are best because I don't want to sell into that level of support. So knowing that this is a support level down here, what's the best pattern to avoid selling into support? Trap patterns. And traps, of course, happen above prior swings. So if we do see the market go through the trend line, we don't want to chase after it. We want to wait for the market to pull back and go. But if we don't get that, just wait for that trap pattern later on in the process. Now, what if I'm wrong with the pullback? What if we just sink lower here, right? Bounce, start going sideways now. That could happen tomorrow, right? What if we end up back down to these lows here, right? What if we roll over and play dead right now, right on top of that measured move? Then what do? We take the size of the range, copy and paste that up. That will create resistance. You got it? Again, I don't know enough about the range yet, but once I know more about the range tomorrow, we'll use it either tomorrow. Then we look for the 1, pull back, 2, and go. We call these two-legged failure patterns or two-try failure patterns, right? Let the buyers try once, let them try twice, and then we'll sell it right back down in, right? It'll look a lot like this pattern back here, right? So if we do see it go into that range, right, it's a 1, pull back, a 2, and go, right? 1, pull back, 2, and go. That's what the pattern will look like, and that's pretty much identical to what I'm looking for here above that range, right, tomorrow morning. Okay, so now we have a couple different scenarios to watch for here on the Nasdaq. How do we turn bullish? What's a bull market look like? 1, 2, 3 reversal, right? So 1, strong move up, right? 1, strong move up. 2, a pullback to the moving average. You got it. And 3, blast off, right? Big move higher here above the moving average. Remember, it's not enough to just get a pullback. You've got to hold that pullback and make that run off of those lows. Once you have that run off the pullback, then mark up that high, mark up the new channel, and remember, come all the way back down and find that base down here and draw the channel from there. That's where you're typically going to get the best entry, right? Nice precision entry on that hidden channel. We call these 1, 2, 3 reversals into a hidden channel pullback. A great pattern. And remember, we do a lot of work on these. I go over all of these patterns inside that free trading course. So now we've got the buy side covered. We've got the sell side covered. We're looking good in the Nasdaq here. How about some gold? That yellow metal, boy, not anything but lazy, right? Anything but lazy, right? You look in the dictionary right now of a strong trend, and you will see that gold, right? Picture of the gold chart right now. Very strong trend, right? Zero overlap, right? Zero overlap. None of this overlapping here. you can definitely tell this market was on a mission, most likely back down to that big round number at 1300. What it looks like happened here on the yellow metal is they got such a strong move down to 1300. Anytime you see a strong move in one direction, you're expecting to see, right, a second leg, and they got that second leg. So now what I'll do is I'm going to take the size of that second leg. I'll use that to project my measured move. Right now, it's just a guess. It's just kind of a guesstimate right now around that 1289, 1290 area. It all depends on how far this market pulls back here for us. But at least now you know how I'm calculating that. And in my experience, when you have markets that are this bearish, a lot of times the following day goes sideways. Now, my big question is, will it go sideways at these lows? Or will we swing back in and go sideways around that big round number? If I had to guess right now, I would guess we go back to the big round number, almost as if the market went down, created a range, said, and again, because that momentum was so strong, it pushed through it, and then we assume they'll eventually realize, oh, whoops, we went too far, and they'll pull it back up right into that trading range. So the bottom line, though, is anytime I see a market move this far, this fast in one session, the following day is usually going to be a bit range bound. So we'll be keeping our eyes open for ranges. In fact, there are ultimately 4 different scenarios I want to be ready for. One is we keep going lower. 2 is, right, we get a shallow pullback. 3 is going to be, right, that big move up, right, that big move up. And then, of course, 4 would be getting stuck inside, right, getting stuck inside that range. So listen to the first one. If we go lower here, right, if this thing keeps going lower here, I've got that next measured move, right? So, of course, if we go lower here, that next measured move now will be one more leg lower. It's probably not going to dump like that, but I won't be ready for it though, right? If we see the market continue moving lower here, I've got that big low down there at 1287.5. I would imagine that's where they're hunting for. So if they keep going lower here, 1287.5, 1286 area, this whole area is definitely going to be our big target. So keep that in mind. And the reason why that's important is if we keep rolling lower here right now, the one thing we haven't seen is a pullback. And as we go lower, the buyers, of course, will start creeping in. Sellers will start getting less interested. And I want to see one of those failure setups. I want to see the market pop back up. I want to see the buyers sort of buy the pullback. And I'm looking for a sell into their failure. Once I get that pullback to fail, then I look for, right, that pullback from there. So imagine now for a moment now, right, we continue here rolling lower, right? We continue rolling lower. At that point, we are desperate for some way to avoid selling into that, right, into that major target. And most of the time to do that, moving average comes over. You'll see the market pop up. The buyers will try to buy the pullback. I'll look for them to fail. I know exactly where their stops are when they try to buy that pullback. Buyers now try to buy the pullback. I know where stops are, and we can sell right into those stops as the market collapses lower. From there, the moving average comes over. I can sell that pullback, and I can go forward from there. Okay, that will be the ideal scenario. It's a failure setup into a pullback setup as we go lower. If this thing really gets crazy, right, if it really starts tumbling lower here, if you really feel like, right, if this market just drops here overnight, your goal is pretty simple now. Find traps, right? If it looks like we're never coming back here, right, if this thing just keeps on pummeling lower when they open up in Asia, look for a trap pattern. But if we see your typical kind of rolling lower here, I want to get up. I want to see buyers try, and I'll sell into their failure as we go back down. Okay, now that's if the price goes lower. Either failure patterns, pullback patterns, right, or a trap pattern if it really gets aggressive. What I'd much rather see, though, is I'd much rather see the price pull back right now. Now, on this pullback, the pullback is where we're going to make our money tomorrow. It's not the pattern that matters. It's what the market does before the pattern, right? It's more important than the pattern. For example, I can easily see, right, I've marked up those lows. I found that channel high, and that's my key level of resistance now that I want to sell off of. I can also see I've got that low, I got that prior swing. This whole area really puts together a nice spot for us to sell. It's all about what happens during the pullback. So if it pulls back on strength, we're probably going to go through that battle zone, number one, up to the secondary battle zone. What I want to see, though, is I want to see him try to go up and stall out. If they stall on this, now I'm setting up here for a two-try failure into a pullback, into a retest of that low, right? A two-try failure into a pullback and a target down at that 87.5 area. So again, this is assuming that we don't get this rocket ship going higher, right? If all it does is barely poke its head above the moving average, let those buyers try to buy it and sell into their stops. Same basic pattern looking for over here. Now, if we get market running, right? If it really runs, that will do what? That will give the buyers likely the control, right? We'll probably end up with a 1, 2, 3 reversal, right? 1, 2, 3 up, right? If this thing really jumps as it goes higher, that will give the buyers momentum now. I would assume, though, they're probably going to swing back down again, back down to that measured move, right? I'm sorry, back down to that big round number. I would assume at this point, if we see a rocket going higher here, if it races higher here, I assume once again, this will probably become a range, and this is just kind of like an overshoot, right? Overshoot, right? It'll overshoot and then correct, and then eventually come right back down into that big round number again. So if we get a shallow pullback here, I can look for a failure into a pullback, and back down we go. But if we get a real strong move higher, whether it's a 1, 2, 3 reversal, or if it's just a straight line up, it really doesn't matter. If we get that much strength going higher, my target now is still back to that big round number, but now I've got to use a slightly different pattern. I'm going to use that nested reversal pattern. Let those buyers try once, let them try twice, and because that big round number is so close at this point, the best way to avoid selling into support is to look for a trap pattern. So let those buyers try once, let them try twice, get that trap high, and that trap high will be our short coming back down as we go. So now we've covered, right? Now we've covered 3 different scenarios. We know if the market turns bearish, right, or keeps going bearish. We know for the shallow pullback, right? We know for the big pullback. Well, what if we just get up here and get stuck in the mud up here? Then what do we do? You know what I mean? Like that might happen tomorrow, right? We may not get really any of these. We may get to go right back up and kind of fall asleep up here, right, inside that range. Then what do we do? Well, if that's the case, now we fade breakouts. 1 try, 2 try, sell back in, right? 1, 2, 1 and 2, sell back in. 1 and 2, buy back up. Simple as that. And remember, we'll know more of this once we get there. But, you know, I mean, if this is the range right there, right, take the size of that range, copy and paste it down, right, find some support down here, find what's above here. Again, right now, I'm guessing right now is where that range will be. But if we end up back inside that range here, now we go up 1, 2, use that, right, use that key resistance overhead. 1, 2, use that key support right down below. And remember, we wait for those buyers try once, try twice, so we can sell back down in. Let those sellers try once, try twice, and we'll buy right back in on the gold. All right, guys? So 4 different scenarios I'm watching right now for the gold. All we need now is a little bit more time, and we'll know what we're going to get. Let's wrap it up tonight now over on that euro. The euro is another one of those sloppy markets right now, but just like the S&P, it's all about the range and it's all about the market's momentum. First of all, we know we have a trading range. Okay, what does a range tell us? A range tells me to buy low, sell high, and you got it. Avoid the middle. Knowing that, I want to buy as the market's going lower. I want to sell as the market's going higher. Who has momentum right now, right? What direction is the market's momentum right now? It is bearish. That strong move down, the pullback, and the jump off the moving average, this is a bear market. Now, what's the best way to buy the low of a range when the market's bearish? Well, look no further than yesterday's session, right? Remember yesterday we saw that strong move down, and then what? The bears tried once, the bears tried twice, and right back up again. That's that same nested failure pattern that we talked about earlier. So as we're going lower here right now, I want to be a buyer going back up into that range. What's the secret? The secret is I want those sellers to try once, make them try twice. I do have concerns here about a trend line coming down. So of course, I will always look for a trap whenever I have a problem with overhead resistance. Trap pattern comes in, bears try once, bears try twice, and we're buying into their failure. Right? You look back in time here and a very similar example of that. Now, we didn't have any problem with resistance overhead on that one, so there wasn't any need for a trap low on it. 1, 2, right, and go up from there. In this example, though, we do want to see that trap low because we have that trend line coming down overhead. Make sure you're buying as low as possible. And then, of course, as we go higher here, right, we then look for that same basic failure pattern, right? We go up. The buyers, of course, now try to buy the pullback, right? We go up. The buyers try to buy the pullback. We let those buyers try to buy the pullback. We let those bulls, right, wrap that rope right around their neck, and we sell right into their failure. We've seen this pattern time and time again, right? Up, failure back down, up, failure back down, up, failure back down. Same basic principles apply. Looking to sell at the top of that euro range. So right now, the euro is overall bearish. I want to see us go up so I can sell it back down, or I can buy down here. But again, because I have that trend line coming down, I got to be careful and use the right pattern. A 1, 2 trap, right? That nested 2-try failure. Now, what if we break out? What would a breakout look like? Just like a reversal. A breakout would be a 1, 2, 3 breakout. Just like the 1, 2, 3 reversal. Pretty clever, right? Pretty simple. Mark up that low, up to those highs, find that hidden channel, and we're selling off that hidden channel. Most importantly, though, make sure you get that 1, 2 run, right? You really got to get that big run outside that range. Then we can have the confidence to be selling the high of that new channel. Same thing applies to the upside, right? 1, 2, 3, big blast higher. You know, who knows what happens overnight? Big blast higher, buying pullbacks for the move back up again. All right, guys. So bears have control on the euro. That means a very specific entry pattern to buy off of those lows. You can get a much deeper dive into all my favorite patterns by grabbing that free course, right, either linked up in the upper right-hand corner or below the video tonight on our trading blog. And then obviously don't forget, right, I'm going over all the patterns I'm watching for tomorrow, but we're going to be getting together tomorrow morning, 8 o'clock Eastern time, and we'll trade this strategy together. It's great. That way you don't have to do this on your own every day because, you know, let's face it. Right, the strategy is very simple. This 3-step strategy is very simple. What's not so simple is the markets. Sometimes the markets can be very complicated, and with the choppy, sloppy price action we saw today, tomorrow could be a very sloppy session as well. So come join me. Come look over my shoulder tomorrow morning in our trade room. We'll execute that 3-step strategy together. We'll grab some euro, gold, E-minis, oil, and we're going to have a great day tomorrow like we do every morning in our trade room. And as always, don't forget, grab that free trial right to the left of my ugly mug here. If you want a free pass, come out and join me as a guest in our trade room. That free trial has a free pass along with your free trading course. Learn more about our 3 levels of membership, our beginner, intermediate, and advanced classes. And as always, there's live support below me, toll-free phone number right to the left of me here, and I always look forward to answering all your questions. So type those questions in the comment section below. I'll see you tomorrow morning, and if I don't see you then, we'll see you guys same time, same place next Monday evening on the next edition of this nightly newsletter. As always, guys, my name is Joseph. Be well out there, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.